So in this part, we will be discussing about the debentures which are redeemable. Now, like I said in the previous video, that debentures are basically loans. So loans, what will happen is there will come a time in the future that you will have to return this loan. So redeemable debentures simply means those debentures which in the future, after the expiry of the period for which it has been issued, the company will have to return this money. Now this redemption, okay, the returning of loan can also occur in three different instances. So first one is again which is being redeemed at par. This means supposingly if you had bought a debenture worth rupees 100. So what will happen is on the expiry, okay, if this money was borrowed for 5 years, what would happen? After 5 years you would have received 100 rupees again. Okay, so 100 rupees you had given them, so after a period of 5 years also they will be returning you a value of 100 rupees or a amount of 100 rupees. Secondly, it may happen again at discount. So discount meaning, like let's say you have given 100 rupees to a company as a debenture. After 5 years you are only receiving 80 rupees. Okay, so this is a situation of debentures that is being redeemed at a discount. Thirdly, we have again at a premium. Now this means that a situation where you had borrowed 100 rupees, after a period of 5 years you are receiving, let's say, 150 rupees. Okay, so normally, okay, the transactions that we record, okay, also certain adjustments needs to be made if the debentures are redeemable. Now you already know, okay, well, the company when it is issuing debentures, it is aware of the fact that in the future they will have to return this money. So when we talk about redemption at par or redemption at discount, no entries are there or no extra entries needs to be done for these two cases. See, at par it may happen, such situations may occur, but normally this case of discount, redeemable of discount, you are giving 100 rupees, after 5 years you're receiving 80 rupees. So what kind of investment is this? Normally this is something that does not occur in practicality. But this premium means that you have to give an excess of 50 rupees when you are about to return this money. So for this purpose, okay, see, one more additional entry needs to be made, that is loss on issue of debenture account needs to be created, okay, which will be debited, and an account, that is to premium on redemption of debentures account needs to be created. This is simply what is happening is, see, like let's say if this was the case of where the share was being issued at 100 rupees, but redemption was supposed to be happening at 50 rupees. Now what would have happened is, firstly you would have received application, right? So bank account debited, let's say 100, and you're receiving it for debenture application. Credit side also 100 rupees. Then this will be allotted. So when this allotment takes place, basically means application money is transferred to your debenture account. So debenture application account debited 100 rupees, and you will be crediting your debentures account by 100 rupees. Now the company knows that in the future it has to return a value of 150 rupees. So this 50 rupees is going to be a loss for the debenture, okay, the debenture issuer. So company had actually borrowed 100, but you are retaining in excess of 50. So this 50 rupees is a loss to the company, right? So what will happen is this provision, okay, you might have learned about the prudence effect, okay, where they say, or when we are maintaining accounts, if there is an expected income in the future, you may neglect it. But if there is any future expenditure or any future losses that is likely to happen, you need to get ready with it, okay, or you need to record it from the advance itself. So in the same way, the company knows after 5 years they have to pay this 50 rupees sum, okay, which is going to be a loss to the company, right? So for this loss, the company will already prepare for that situation during the issue itself. So what they will write down is loss on issue of debenture account debited to premium on redemption of debenture account. So what will be the value of this account? It will be 50 rupees. Okay, so this is what will happen if the debentures are redeemable in the future. All right, so that is what will happen in this case. So let's see, okay, again let's see some examples to see if how this is to be recorded. Let's say there is a company P has issued let's say 5,000 10% debentures each at let's say a discount of 5%. So this is the issue, and it is redeemable after 5 years, and let's say this redemption is taking at par. So what will happen? Normally how we issue debentures, we will record the transactions in the same way. Firstly, bank account debited to 10% debenture applications, value will be 5,000, okay, and it is being issued at a discount of 5%. So let's say the value of the debentures was not given, okay, so let's say this value of debentures is rupees 100 each. So 5% means at rupees 95 they will be selling it, okay, whatever will be the value, please write it down there. Then what will happen, nextly we need to transfer this. So 10% debenture application that was received, okay, will be debited along with this discount on issue of debentures. So this means debenture application received is 95, okay, the discount that is offered is 5 rupees, and on the credit side you will be writing down to debenture, sorry, not to debenture, to 10% debenture account, let's say 100 rupees, right? So this is how you will be recording. Now since this is being redeemed at par, like I said, no additional entries is required to be made. So this will be the journals that you will be recording for this. If the same case was there, okay, where it has been stated after 5 years at a premium of let's say 5%, now this case, now we would have had to record additional transactions for the preparation of this loss, the premium payment that the company is going to make in the future for 5 years. So that would mean one more additional journal would have appeared, and that journal would have been simply loss on issue of debentures. Now what would have been the amount? 10% premium. That premium is supposed to be calculated on the face value, that is 100 rupees. That means 105 rupees will be paid. That means 5 rupees additional losses would have made as premium, so that would be credited as to premium on issue of debentures, sorry, not issue, premium on premium on redemption of debentures, 5 rupees. All right, so this is how you will be recording the transactions for the redeemable debentures. So all we need to keep in mind is if the debentures are redeemable at a discount. Now discount situation you will not see because that is not something that occurs practically. All right, but even at par, whether it is being redeemed, if the two cases are there, if it is being redeemed at par or at a discount, no additional entries are there. But only if there is a situation where the redemption in the future is going to happen on premium, then this additional entry where you are preparing for that payment of premium, that you will have to add to your entry. All right, this is for the issue of debentures which are redeemable.